Hello, traders. It's 8:03 a.m. Chicago time on the 29th of October 2018. It's Monday. Happy Monday to all. Brand new week and the last Monday of the month of October 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment this morning, risk on. The leader today is the DAX, driven by news that the German Chancellor Merkel will not be running for re-election for the CDU party in Germany, but she will finish out her term. That news came out at 4 a.m. Central Time. And since then, the DAX has been running up. It's up 2.5%, up 278 points. That's pretty big. The Euro stocks are up almost 2%, up 60 points. The NASDAQ up 76 points. The laggards today, crude oil's off by 42 cents, which is just two rotations, really. The Japanese yen is off. The dollar stronger today, 27.5 cents up. A reminder is that the Europeans have moved to daylight saving time. The difference between New York and Frankfurt now is just 5 hours instead of 6. Just remember that if you're trading European products, that the time difference is not the same, especially if you're paying attention to economic releases. And if you're in Europe, then American U.S. time or North American time on the East Coast is slightly different. So we're still a week. We'll be shifting. We'll be falling back 1 hour next Sunday. Okay? Just pay attention to that. Looking ahead at our calendar today, nothing on deck, just Fed Speaker Evans at 15 minutes after the open. Let's jump into our review. The main expectation on Friday was for the market to push lower, push into 26.46, and bounce back up and finish inside the range. Is basically what we got. Ooh, excuse me. It's basically what we got. We pushed way deeper, of course. We continue to push way deeper. And then we ran right back up, finished in the middle. Excuse me, I'm in a sneezing fit here. Finished in above the mid, above the point of control, and inside of the prior day's range. Lower highs, lower lows persist, except this morning we're gapping up, and we may be ending the one-time framing down on daily yet again today. I have to squeeze in my sneezes in between sentences. Apologize for that. The high overnight on the S&P is 2,727. Or 75. Excuse me. Let's try that again. The high is 2,700.75. That's also the 38% pullback from the beginning of the rundown. Let me show you that. Right here, there's a fair amount of confluence. So if you take the pullback from the 17th to the 26th, that's 38%. The century figure, the MCLVN, long term, and the overnight high all in the same spot there. The overnight session, Not this one. The overnight session, fairly standard. We pushed up immediately on the open yesterday at 5 p.m. Central. When we came right off, we tested lower and then held sideways through the Asian session and then the European Open as well. The European Open right in here for the Bund. And so overall, we were in an upsloping channel, and then the news came out at 4 p.m. or 4 a.m. right in here, and boom, it goes off in sympathy with the European markets. So overall, just ripping up and holding steady at the high. The point of control is likely to shift up on the overnight session. Giving us basically what is a clear trend up on the overnight. So 338,000 traded. That's 3 times the historical mode for the overnight session. And we're just not backing off. We've left the mid way behind. The mid basically trading at the opening high, basically the IB for the night session. VWAP's also down there, and we're holding way above there. Looks quite bullish coming in this morning. Let's look at the bigger picture. The bigger picture, step this forward. The bigger picture, the most prominent fact here is that, like last time, we broke the one-time framing down. This is one-time framing down right here. We broke the one-time framing down pretty strong, so we broke it, and we had a pretty strong up day. And then we created a higher low, so we started to look like we're one-time framing up, and then we broke down and we're pushing through. Since then, one-time framing down yet again. We go every day, makes a lower high. That's what's important. For a trend down, lower highs, not interested in lower lows. It doesn't matter if it makes a lower low or not, as long as it's a lower high, meaning the auction could not exceed the prior high. The buyers could not gain ground that they had the day before. Then we call that one-time framing down. And today that's likely to be breached, and we're likely to see a quick pop into 2750 coming in the next coming days. Looking down the barrel at the week, the week has quite a few releases: German CPI, unemployment, GDP in Europe, and so on. But of course, we have the non-farm payrolls and unemployment on Friday, so that's what the market's going to look forward to. Overall, what we've done is we have had quite the pullback. We have not quite breached anything that we have done in February. We were trading May prices at the lows, so the damage here is confined to about 5 months of rallies. So it's not really, I know that a lot of people on FinTwit and on TV and so on are calling this the end of all ends, but overall we haven't really accomplished all that much. Now it was quick, that's for sure. It was quick. We took back this territory quite rapidly, and it does look like it's crashing. But overall, when you look at what we've done, we still have a market that is not too far from its balance point at 27 and a quarter, and has only really destroyed 5 months of value, not years or anything like that. We're still under the 200 SMA, and here and in the SPX, And so that's something to monitor. Our volumes are up, our ranges are up, and that's all kind of bearish type of behavior. But it's not like it's not one of those things where I'm going to look to continuously press the short side because we continue to crash. This market's giving us opportunities both ways, in my opinion. So, what do we have for today? For today, we're looking at, as I said, a gap up. We're gapping up. We're at the top of Friday's range. We're looking at an open auction that is likely to balance out. This is likely to push lower. I'm looking for a slide down into 2680, 2683, consolidate in here, potentially push lower. But if not, then I'm looking for this to start moving up and attacking this 2704 area, which is a key area, and then potentially 2713 before it starts to back off. So, it may drop lower and continue up to track, but overall, I'm looking for the 2680 area to act as support. That's the key plan for the day. If we follow normal auction behavior, that's what we're looking for. Secondary, we open, drift up, push the overnight high. The point of control is likely to shift up here. We're likely to get some energy to the upside, push the overnight high, push into 2704, impulse down, and then start to trade down into this point of control from Friday. Friday was quite a balanced day. It was a neutral day, and so it's set us up pretty well for a push up on any news, and we got some news. But overall, that's what I'm looking for. I'm still, despite the fact that we are, bouncing up, you have to bear in mind the bigger trend, the bigger current trend. We are definitely one time framing down on the weekly. We keep pushing lower lows on the weekly. There are a couple things that are working for the longs, for the buyers. However, one of these you may have or may not have noticed is that we pushed even lower on Friday, but the VIX just did not respond. So premiums had already priced in the drop, the lower low on Friday. Even in this segment of Friday's trade, I keep an eye on the VIX. Even in this segment here, which was really selling pretty good, you could see the delta was pretty strong on the sell-off. Even in that segment, the VIX just was not responsive, as if the options guys have already priced that in. I believe, in my opinion, option traders are much, much more savvy than the rest. And so, to me, it does that kind of bodes well for the longs. So here's the VIX. Here's the VIX, and it's been coming off. It's been coming off, and it's not really pushing new highs as we push lower, even when we're accelerating lower. Actually, this is not a good demonstration of that. But if you plot the movement of the SPX versus the VIX, it certainly didn't respond as strongly to the down move on Friday as in prior moves. Okay, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.